Okay, folks, welcome to Sunday Night Futures Live. I hope everybody's having a great Sunday evening and a great weekend. I completed my first weekend, or week, I should say, of Sober October. It was a challenging weekend, no booze, no carbs for the month of October. Feeling good. Went to the gym a lot, got a lot done. But the carbs, that's the real killer, real killer. So the futures are set to open up here a bit lighter. According to Zero Hedge, I haven't checked the futures yet. They just opened up just now. Futures set to slide after China balks at pursuing a trade deal. We'll check that in a moment. Why is that a problem? Well, they don't want to discuss the larger problems, and that is intellectual property theft, etc. And they're smelling blood in the water because of the impeachment talk here. So they are going to drag their feet. They're hoping to get Elizabeth Warren to negotiate with, and apparently she's going to be the front runner for the Democrats. And if they can serve to bag the President of the United States in an impeachment trial or impeachment hearing, and then it goes to the Senate for trial, that would be a major problem for the president. So I'm kind of dragging my feet here to get to the charts because I want to let things settle down. The knee-jerk reaction at the open on the futures, I expect to be lower. In the end, though, I don't think that this matters. We have had a trade war going on for 2 years now, and what really matters is this: the Federal Reserve. That's all that matters right now. They are piling on the debt. They're going to continue piling it up. I'm going to show you charts in a moment of the Federal Reserve's balance sheet expanding like you've never seen before. It's incredible. So let's talk about what we're going to talk about this evening. First up, economic data. What happened last week? What's coming this week? Also, we're going to talk about the jobless numbers on Friday. What a joke. The unemployment rate, 3.5%. It's a joke. It's a sham. And if you agree with me, please click that like button because it is an utter scam. I'll show you the real economic or the real unemployment number that everybody should be focused on. And it's the U6 report out of the Bureau of Labor and Statistics. Stick around for that. Then we're going to take a look at the charts that we're watching for the coming week. I think that we're going to need to get long of this market because the Federal Reserve is going to have the markets back, and we may get an opportunity tomorrow with the sell-off. If this continues overnight, a sell-off in the morning, we'll see if we get a retest of recent support, and what we're looking for are higher lows. I discussed this with members on the week ahead commentary. I posted it yesterday, and I sent it out yesterday as well to members, and we talked about strategy. How do we want to approach this market with the Federal Reserve now having the back of the market? We want to get long, but we don't want to buy into the Thursday, Friday rally because we haven't had a pullback yet. We haven't had a validation that we've seen the lows as of yet. So we're watching. We'll talk about the symbols that we are watching to get long of. And we are not looking to short the market right now. I keep saying this. It is not time to short this market. It is coming. As sure as God made green little apples, it is coming. But not quite yet, after the 2020 elections. Or if this impeachment issue becomes a bigger problem. Thank you for the likes. And that's another thing, folks. YouTube's algorithms, they really hamper the small creator like me. If you could give a like, leave a comment, I would really appreciate it. RL, hey brother, how you doing, man? Pal to speak to. Yeah, he's going to reiterate what he said last week again. More of the same, right? You're going to have the Federal Reserve, their minutes from last month come out. In reality, it's not going to mean much. So now that we have double digits in terms of visitors to the live stream, and again, welcome folks. You can catch what I've already said on the replay. Thank you for joining. I appreciate it. If you can hit that like button, let's go for 30 likes tonight. That would be great. It would really help me out. And comments, and share with a friend. Invite them over. Let's get the real news out there, please. Thank you. All right, let's go to the futures action. Let's see what's going on. All right, so As I said, the S&P futures did open down. We are down. We are off the session lows. We're down just shy of a half percentage point. You could see here that we were lower. We are reversing to trade up again. I don't think that this China news is going to be a market killer. I just don't think it is, because you have the Federal Reserve out there. They're going to bid this market up. They're going to buy the entire spectrum of the bond curve. They're going to buy it all up. They're buying long-term bonds. They're buying short-term bonds. Why not buy the stock market? And again, the trade war has been going on for 2 years. Go figure. I don't think it's going to matter. Let's go take a look. These are all 4-hour charts. Unless I say otherwise, all 4-hour charts on the futures. I'm going to do a cursory overview now, and before I sign off, I'm going to go back and I'm going to revisit the futures before we sign off tonight. So no worries if you just joined it. Let's check out the US dollar. We'll use the Dixie. The dollar is weak. I'm looking for a break here on the US dollar. I think that in a very short period of time, you're going to see a coordinated effort to devalue the dollar. They're going to need to do that. Moving on to gold. Gold is up slightly. We were higher. We've pulled back some. Our gold mining trade did very, very good last week. We were down on that trade. Then we flashed a bullish reversal bar off of the weekly lower band of a bull flag setup. I went over this with members yesterday on the week ahead commentary. Members, go check it out. It's posted on the website. The Russell 2000. Here's the pullback I mentioned earlier. We're looking for a pullback on these markets to provide us with an entry level. And we closed out Friday very, very strong, but up and into a resistance level. Now, in the Sunday night futures action, we have pulled back. What do? We did a retest of what was resistance, should now act as support. I'm predicting that the support level will hold, and that in all probability, we're going to shrug off this China headline that came out on zero hedge, and we will probably move higher. Taking a look at the Nasdaq. Again, here's where we closed out on Friday. Very, very good price action. We've pulled back so far this trading session, the Sunday night future session, and we have bounced off the 20-period moving average. At current on this 4-hour chart, we have a bullish reversal bar. We'll see whether or not it closes there. We are down at current about a half percentage point on the session. We'll revisit this. We'll come back to it. Silver, we're up at current. We are off the highs of the session. Silver, I'm looking for a breakout. Take a look at what you have setting up here on silver. You have an inverted head and shoulders setup. Here's your left shoulder, here's your head, here's your right shoulder. We're looking for a breakout. Ideally above the 18 level. 17.80 may make a nice entry point as well to open up a position. So we'll keep an eye on silver. We are currently long of silver. We're looking to buy more. And a breakout on a 4-hour basis would inspire me to do so. I will be sending out trade alerts to members. Let's segue now over and into some of the economic data that's coming out this coming week and that was released last week, because I have some commentary on that. All right, so let's just first go with the economic data that's coming out this week. For the most part, it doesn't matter. We are going to see the FOMC minutes from last month, old news. You may get a market reaction one way or the other, I don't care. The Federal Reserve is in the bond buying business. They are expanding their balance sheet out, and they are in the market of supporting the stock market. In terms of supporting us, the taxpayer, the consumer, the middle class, they couldn't give a rat's you know what. So they are going to continue to drop yields. They did it last week. Those who are retired, living on fixed incomes, my heart goes out to you. It's horrible what they are doing, but unfortunately, these are the times that we live in. Very interesting times, as the Chinese say. We're going to get core CPI and the CPI coming out next week. You know what? Hey, Sam, how you doing, brother? Midnight there. Oh, you're in Singapore, right? So the Federal Reserve, in terms of inflation, they are going to allow inflation to run hot. You had Janet Yellen say this. You've had, to a lesser extent, Powell. He's been a little bit more nuanced with saying this. He's gone from saying they would let inflation run hot to saying that rather than a 2% target on inflation, we're going to have a range. On average, it'll be 2%. At current, we're at like 2.4% on inflation. You know the reality is that Italy, good for you. My wife's cousins are coming over from Italy next week. Excellent. So they're going to let inflation run hot again. They don't give a rat's you know what about us, the consumer. They're going to pretend inflation doesn't exist. So we got to deal with it. You have to be long of an inflation hedge. Gold, silver, the miners. You got to get long of them, folks. We are heavily positioned in that direction, and now we are looking to buy the stock market this coming week. So if you're not a member, please join up. 14-day free trial offer. All right, so I want to talk about the data that was released last week, and it's simply horrific. ISM non-manufacturing came in horrible. This is the services sector. This is by and large the vast majority of our economy. Horrible number. Manufacturing, even worse. We have the manufacturing sector, which in all intents and purposes is now in recession. A number below 50 is a sign of contraction in manufacturing. This is the last thing the United States needs, is a shrinking of our manufacturing base, but it's happening. And when you take a look at the non-farm payrolls, this is just bad. What they did here is that they reported a number of 136,000 jobs created. That was less than the expectation of 150,000 jobs. That's not the real news. And the real news is this. They don't want you to look at the miss on non-farm payrolls. What they want you to look at is this number here, 3.5% on the unemployment rate. They want you to pay attention to this number. They're saying it's at a 50-year low. However, the calculation of how they arrive at the unemployment rate is completely different than what it was 50 years ago. What you need to look at is this number here. This is out of the Bureau of Labor and Statistics. These are not my numbers. And these numbers here represent reality. Here's the U3, which is not reality. For whatever reason, it's showing, oh, here it is, yeah, 3.5%. The real number that we should be looking at is the U6 number. This is historically how they have measured unemployment. And the U6 number is double that of the U3 number. So when you hear them say to you that we're at a 50-year low in unemployment and they cite the U3 number, I know you're a smart lot. You're here with me on a Sunday night. Be proud to say that number is absolutely wrong. It's a fraud. And you need to pay attention to the U6 number and educate everybody out there. And the U6 number includes people that are marginally attached to the workforce. And they are part-time for economic reasons. Economic reasons. The economy is supposed to be so great, yet you have the U6 number that is double that of the U3 number and is it's nearly 7%. So let's move on to the Federal Reserve, and this is why I think that you need to buy stocks. And if you haven't hit that like button yet, if you could do that for me, I really appreciate it. Thank you very much, and leave a comment. Give me feedback, and I love it. And if you have a couple of symbols that you want me to go over, we have some free time. please drop them in the chat box below, and I'll take a look at them for you. I do give priority members, and I do have a couple of members charts that I will go over for Anthony and Norris. I forgot you guys a couple of days ago. I apologize. I'm going to go to your symbols tonight, guaranteed. So I discussed this chart last week, and this chart is it's a max view going back to 2003 on the Federal Reserve's balance sheet. And you can see that after 2001, the bombings, the attacks on the World Trade Center, the Pentagon, and those folks in Pennsylvania, the heroes in Pennsylvania, the Fed's balance sheet just ripped through the ceiling. However, it began to unwind some. That's all changed. We now have the Federal Reserve's balance sheet in a breakout yet again, 1 year chart. This is since August, folks. Take a look at this rise. The low was 3,759,000,000,000. Let's call it 3,760,000,000,000 to round it off. At current, since that point in time, we are on the doorstep of rallying through. Think about it, rallying through $4 trillion yet again on the Federal Reserve's balance sheet. They not only kick the can down the road by saying, okay, you know what, we're not going to stop buying bonds on the 10th of October as we said we were going to. We're going to push it out another month. And you know what? We're going to keep it open-ended just in case. So they are back. They are back in full force. They will never call it QE4. To do that would mean that all the prior QEs failed. But we'll call it QE because we want to remind everybody that it's failure. This is an absolute failure. This experiment that they've conducted, not just here in the United States, but globally, is an absolute and utter failure. All it is served to do is make the poorer poorer and make the richer richer and to destroy the middle class. And they're going to put the pedal to the metal, and they're going to make it even worse. It's very, very sad. And we have a problem here, folks. The problem is that we have impeachment. That is, they want him out. They want President Trump out. He's made mistakes in terms of this QE stuff. He had it right before he got elected, saying that this is a big, fat, ugly bubble. He's absolutely right, but it's only gotten worse. But do I want a socialist in office? No. But they're going to try. They're going to try to get him out. And I'll be honest with you, with the shenanigans I've seen out of just the parliament over in Great Britain, the Tories defecting, if he gets impeached here and he goes to the Senate, I would say that I wouldn't say there's a 100% guarantee that they will vote to, or shouldn't say that they will find him innocent or not have him stand trial. I don't trust these Republicans as far as I could throw them. They're just the old school Democrats. Yep, you got it, Samuel. So this is a problem. And did you know that the guy that's leading the charge, this is Adam Schiff. Guess who he's related to? George Soros. Go figure. Fact check. Are George Soros and Adam Schiff in-laws? Yes. His sister is married to Robert Soros, son of billionaire George Soros. Can this get any more incestuous? Really? So you have a puppeteer out there. I mean, this George Soros is a Bond villain, squared. And he is the puppeteer out there, and he is manipulating governments 6 ways from Sunday. He is assisting to help us bankrupt ourselves. You had Karl Marx say that the only way to destroy America was from in. He was absolutely right. So Saul Lewinsky would be proud of Adam Schiff. Congratulations. And let's get to a couple of symbols that I wanted to go over for members and some symbols that we're watching for the the coming week as longs. I am not looking to short this market, folks. And we'll leave off with, if there are a couple of symbols out there you want me to go over. Yep, Trent, that's a fact, brother. You don't hear that in the mainstream media, right? You don't see Adam Schiff. He's on TV constantly. But you never hear him ask the question, are you really related to George Soros? You never hear that, ever. That's why, please, hit the like button. Allow this to be heard around the globe. YouTube's algorithm favors CNBC, Fox News, and other, CNN, these ridiculous mainstream media that I have no use for. So please click that like button. It helps me out a lot. Thank you very much. All right, so I'm going to go over some symbols. I believe that this is one for fellow member Norris, great member. Hope you're still long at the utilities, Norris. Great trade. You've been long enough for a long time. And if you're here, please drop a note and say hello. So his symbol is CRZO, Carrizo Oil and Gas. What I like to do is I like to start off with a monthly view to see where we've been, to identify where we may be going and where our historical support levels are. So at current, we can't buy these shares. I'll drill down to see whether or not we have a swing trade set up, but I always want to take a look at a chart and say, would I be an investor long-term in this trade? No, I wouldn't, because I think we're probably going to break. We may hold this. RL, you got it, man. Thanks for joining every week so far. Thank you. I'll go over for you. Yep, I was going to go over Baba. Yep, you got it. It's on my list here. It's on my list. You got it. Okay, so we may hold this support level. I'm using Trend Spider. If you guys like Trend Spider, it does a lot more functionality than I even use it for. There's a link below in the description area. Get a 25% discount. Click that link. Use CT25Z as your discount code. All right, so 671 is critical support. We closed out last week at 6.45. So we have a way to go here before these shares become a buy. We need to see whether or not the 6.71 level is going to hold. Weekly chart. All right, so last week we had a new weekly low, 3 sequential weeks to the downside. We broke down below support at, oh no, actually we bounced that support. Sorry. We bounced that support, but it looks as though we're probably going to break here and head lower. If we put in a new weekly low on CRZO, at a bare minimum, we're coming down here to 6.71. After that, if that doesn't hold, we're coming down here to 4.66. I would avoid these shares right now. Folks, if you're just joining, thanks for joining. I appreciate it. If you click that like button, it helps me out a lot. We have a goal of 30 likes tonight. I'd appreciate it. Thank you very much. Moving on to the daily chart. We're consolidating here sideways. We may see a pop. I couldn't buy these shares. Let's bring up the trend lines. All right, so you can see, using the automated trend lines here, we're bouncing off of daily support. Now, this would only be a swing trade. So we look as though we're holding the support level. If you wanted to buy with a stop right below last week's lows, fine. Go for it. Keep it small. When would I add more? On a close above this upper band of resistance. That would be more attractive. We're seeing signs of strength. So CRZO, it's short-term swing trade if you want. It's not an investment. It is not a position trade. Short-term swing trade to the long side. It is definitely not a short right now. Not with all of this support below. This is the value of Trend Spider. Click a button. Huge time saver. All right, let's talk about, what was my other symbol I had to go over? IQ. I think this is fellow member Anthony. Euro US dollar, the pairs trade. Okay, we can do that. I can't even say the name here. Okay, but it's an ADR. That means that is a foreign stock. I'll come back to the daily chart. Let's keep consistent with the higher level view of analyzing charts. And I like to go with, well, there's not much data here, is there? This is a fairly new issue going back to March of 2018. Not much data here to go by. We'll go to a weekly chart. And the weekly view, okay, so it's interesting. We have held the support level here in blue. Sorry, the microphone would help, right? We have weekly support here in blue, which held last week. And we have a bit of resistance up here in red. So what we're looking for here, before we can get long of these shares, is a close above this upper band of resistance. If we get that close on a weekly basis, then the shares become attractive. However, there's a problem. And that problem is on the daily chart with this price action here. On Friday, we rallied and we were rejected at this resistance level here at current, which is at 16.39. Now, what I would do here is if you're using TrendSpider, I would do this. Oh, you're in China, RL. What part of China? I would do this. I would take off the daily trend lines and I would bring up the overlay of the weekly trend lines, because this is what matters, right? It's weekly resistance on this trade. I don't care what it does on a daily basis because I'm not touching it. So I want to see a rally and a close above this upper band of resistance here in red. If we close there on a weekly basis, meaning on Friday afternoon, 3 p.m. Eastern Standard Time, we're trading convincingly above that current resistance level, I would be a buyer. I would look to open up a position. I would then look for a pullback and a retest of that support level, which should act as support. Then I would buy more on a continuation breakout higher. So I hope that makes sense. If you have any questions, please drop them in the box below. Before I go to the request, I'm going to go over some symbols that we're watching for the coming week. We're always watching UGAZ. UGAZ finally bounced last week off of our predetermined support level. We did this, I believe it was on a weekly basis. Yeah, I had an alert set up, and it bounced. Let's go back to the daily chart. It bounced off of this support level here. Nice rally. We had a topping tail on Friday on this daily chart. What I'm looking for here is a pullback in either A, a retest of last week's lows, or B, a continuation move higher. Then we'll look to shop for UGAZ. Oh, IQ's a China stock. Gotcha. Thank you for that. I wasn't aware of it. I never heard of it before 10 minutes ago. Thank you. NUGT, we're currently long of. I already went over that with members. We'll talk about the banks. The banks did well last week despite the drop in yields. They generally do better in a rising interest rate environment. So I'm cautious about the banks. And I don't like the daily chart of the DPST, which are the regional banks. However, when you take a look at the weekly view, I'm looking for a breakout here, a convincing breakout above this upper band of resistance. I already have an alert set. I'm looking for that alert to get triggered, and I would look to buy the regional banks on a rally up and through that upper band of resistance. Why do I even want to consider the regional banks? The reason is that you have home builders, which are rallying, the new home builders rallying. They're making mortgages. Who makes those mortgages? Regional banks, right? So yields are declining. They're probably going to stay extra low. More home building, more home buyers. You need to buy some banks, not overly aggressive, but you need to have some sort of an exposure if and when we get the breakout. I'll send out a trade alert when we do get long. LABU. For those of you that trade options, I like to sell for premium. Blockchain, I'm going to go over your question in a moment. Thank you for the question. I appreciate it. I like to sell LABU options, put options for premium. And I think that we had a fairly good week last week in terms of a reversal on the week, and we came very close to prior support. We may pull back here again. I think that on a daily basis, we may pull back. I'm eyeballing if I believe they do have 28 strike price put options. On a pullback, I'm going to look to sell those put options, bringing in premium, bringing in income. That does not mean I'm bearish on LABU. I'm actually bullish because I'm selling the puts. I'm being the banker. I'm letting time decay work for me. I'm not being the borrower. So I like to do that. We did that with NUGT put options last week. They expired worthless. So let's move on to what else we're watching. Cure. This is a leveraged ETF putting you long of healthcare. Healthcare is looking very good. It's had a nice bounce back. Let's clean this up here a little bit. On a weekly view, we recaptured prior support. Now, we had an alert up here. It expired. I want to see us break up and through this resistance level. And then I'm going to be look to buy the CURE, the leveraged ETF. If you don't want the volatility, simply go with a like of this video right now. I would appreciate it. Or, I'm joking. Simply go with the HLV. That's the healthcare ETF if you don't want the volatility of Cure. Okay, this is very volatile. You need to be able to sleep at night. Cure is our pick to get long of healthcare. We've been talking about Parker Hannifin. Parker Hannifin, we're watching. We're looking for a breakout here at the 183 spot 3-1 level. Nothing to do here. I don't think it's going to hit it anytime soon. USLV, we're already long of. I already went over USLV. We're looking to buy more here. Members, I discussed USLV on the week ahead commentary. Please go and check that out. And let's go to some symbols that are being requested. We'll kick it off with Alibaba. All right, so Alibaba, we spoke about a while ago, and I still have an alert set here. Now, keep in mind that we had a headline that came out earlier about the Chinese not coming to the United States this week to cut a deal. All right, it's not going to happen. If they do get a deal, it's going to be a bad deal. In all probability, you're going to see a little bit of weakness on the Chinese stocks. So just be aware of that. In the end, I think they're going to shrug it off. I like the setup here, monthly basis. We have a bullish key reversal so far for the month of October. It's very early in the month. We can't hang our hats on this yet, but the price action thus far is fairly good. Weekly chart. On a weekly basis, we had broken down below key support the week prior here in red. Last week, what did we do? We rallied back. We recaptured that support level, which makes it very, very attractive. What the markets just told you is that we have buyers below. The market sent us signals. And what I want to do here is I want to keep a close eye on what is going to become the new, this is wrong, the new lower band of support if we do, in fact, rally. And that's going to be right here. So ideally, we get a pullback and a retest of this support level, and then we break out to new highs. Here's my alert. This is where I want to get long of the shares. Maybe I'll nibble down here, but ideally up and through the 187 spot 7.5 level, Alibaba looks like a good buy on a closing basis, not on an intra-week basis. Remember, we're using a weekly chart here. 3 p.m. on Friday, Eastern Standard Time. If we appear poised to close above that resistance level, game on. It looks good. So Alibaba looking better. Last week, or the week prior, looked horrible. Daily chart. Okay, so bullish reversal bar on Friday. We may get a pullback due to the China news tomorrow morning or overnight. I think it'll shrug it off and rally on just with the market. Simple as that. All right, so we had OKTA for RL. Let's go to that. Blockchain. Happy Sunday, brother. I'm going to get to your questions. And you're very welcome. All right, OKTA. Let's stay consistent with our analysis. Monthly view first. Another one, not much data here. But what I see is interesting in that we have an inside month thus far. I mean, last month was a very, very bearish month. So we have an inside month. We did not get a continuation move lower. The month is early. It could all change. So we want to be cognizant of that fact. But so far, as we know it, the price action is fairly good. And on a monthly view, it's looking okay. Now, weekly view. Keep in mind that on a weekly view, you have resistance above here. We closed at 116.53. You're going to have resistance at 129.60. Okay for swing trade, as long as you keep a stop right under last week's lows, because if it takes out that low, we're going to take out the lows of last month, and you don't want to be long of that sell-off. Let's take a look at a daily. Well, before we leave this chart here, I want to point out something on RSI. RSI broke out. So you have a double bottom setup on RSI. We broke out above the pivot point, and then last week we broke out above this downtrend, which formed here after we failed to press up higher back in late July. That downtrend is now over. Now, what typically happens with breakouts on RSI, and this is the norm, not a maybe, this generally happens, is that you get a pullback and a retest of what was resistance should now act as support. Then you get a move higher on price. So be careful here with OKTA. While I'm optimistic on a monthly basis, the month is still early. On a weekly basis, it was a great week last week. It was an outside reversal week. We held the rising 200 period moving average. Good stuff. Daily chart. A bullish reversal bar on Friday. Let's bring up some trend lines here. Let's use weekly for a moment. This is a tough one. I'll cut it short right now. I wouldn't buy these shares right now because overall you have a stock that is under pressure. It is in a downtrend, right? So we've had a series of back-to-back up days. What is the probability of the shares moving up higher? It's fairly good, but you're going to have resistance right here on a weekly basis. And if you take off the weekly overlays, you have resistance up here at 127.85. I don't like this setup. I don't want to buy a stock that's in a downtrend as a momentum trade to the upside. I would rather wait for a pullback, a bull flag setup, whatever, a consolidation, and then I want to buy the breakout. That improves my risk v reward on the entry of these shares. Were this a stock on a monthly basis that was in an uptrend or a weekly uptrend, I would be so inclined to buy a new daily high and trade it higher. Right now, you have a shaky market and you have a stock that's in a downtrend. I would wait for a pullback here, and then I would look for an entry point. I wouldn't be a buyer on Monday morning. Just one man's opinion. I could be wrong. And you could quite easily press up higher on Monday. I could have egg all over my face, but this is not a trade that appeals to me personally. And if you're just joining, folks, thanks for joining. If you could click that like button, I'd really appreciate it. Thank you very much. It helps us out with the YouTube algorithm. All right, so Samuel, I'm going to go to the Euro US dollar trade in a moment on the futures. Let's go to, do I use Fibonacci's? I rarely do. I did recently on the pullback on NUGT because I was trying to decide where I might want to add more to the position. And that's the most recent time I've used the Fibonacci's. I'm not a huge Fibonacci guy. I do use them at times, though, when I'm looking for a validation of what I believe to be a good support level or a resistance level. But it's not hook or by crook. Every trade I use the Fibonacci's, but they have value. I don't discredit them. I do refer to them from time to time. In fact, I'll bring up my most recent use of the Fibonacci's. And that was was right here on this sell-off using stockcharts.com. And I have to learn it on, I'm getting more and more disappointed with stockcharts.com of late. So I'm learning to use it on TrendSpider. But you can see here that I did use it for the pullback on the NUGT. So yes, I do use them from time to time. All right, going back to, all right, so blockchain, you had a question. I know you are currently bullish, at least until elections, but at what time would that change? Good question, very good question. What would need to happen fundamentally and technically? A breakout, a break of recent lows, or trend line of S&Ps? Okay, yeah. I'll go to the chart of it, and I'll talk about that. And why the gap down tonight? All right, so I'll answer the last question first. The reason why we had the gap down tonight was on the news that China, well, although they have a trade group that's coming to negotiate here in the United States, they're really not going to, they're not coming here with any intent of making big concessions to the United States. And I didn't expect it. Nobody really expects it until after the 2020 elections. Think about it. Would you rather negotiate a trade deal with Donald Trump or Elizabeth Warren? Where are the Chinese for what they're going to have to concede to President Trump to get a deal versus Elizabeth Warren? It's worth another year of tariffs. They've already gone through 2 years. They're still growing. Their biggest problem over in China right now is Hong Kong and pork prices. Pork prices are going through the roof because they have a disease. I forget what the disease is called, but it's like a swine flu type disease over in China. Huge increases in pork prices, and they have a protein issue over in China. So that's their biggest problem right now, not a trade deal. So that's the reason why. All right, so when is it all over for this market? We'll talk about it from a fundamental perspective first. On a fundamental basis, I worry much more about what's going on, not just here in the United States, but what's going on with freedom of speech over in England. The censorship is just crazy. You have the conglomerates, the monopolies in Silicon Valley clamping down on free speech. You have conservatives being silenced. The opposition party to the Liberal Party, the Democratic Party is being supported by the mainstream media, by the monopolies in Silicon Valley, Facebook, Google. I mean, this is fact. I don't make this up. It's fact, and they don't even deny it. So that's a problem. I mean, there is a concerted effort to. I'm going to do a video soon. It's going to be called American Coup. There's a coup that has occurred here in the United States, and it's not over yet. It began prior to the 2016 elections. It started again after them, and it's occurring now into the 2020 elections with the attempted impeachment of a sitting president of the United States. You have this guy Adam Schiff. He's the chair of the House Intelligence Community. This guy should be brought up on treason charges. He met with the whistleblower, telling him what to say about what's going on with the president, trying to set him up as a fall guy for this whistleblower. This guy is corrupt, and he's related to who other? George Soros. And with the Republicans, they despise President Trump. They tolerate him. Would they rather a Mitt Romney? You bet your bottom dollar they would want Mitt Romney in there because he can be controlled. They would want him out. So this impeachment issue is a major problem. I didn't think much of it initially, but then I started concerning myself more with the spineless jellyfish Republicans that are in the Senate. They worry me more than anything else. If they fold, there goes the Republican Party, and you're going to see riots in the street. So fundamentally, that's my biggest concern. Why is it not the economy? It's because we already know the economy is falling apart. Our manufacturing is contracting. 2 months of back-to-back contraction. Below 50 on the ISM manufacturing reading is a sign of contraction. You have ISM manufacturing index, which is not in contraction yet. It missed by a mile last week. You have store closures at 8-year lows and going lower. The economy is screwed. The only thing propping up the economy right now, debt and the Federal Reserve. It's simple as that. It's sad. It's very, very sad, but this is the reality. So fundamentally, am I concerned about the economy taking down the markets right now? No. I have the Federal Reserve on my side. It's sad. I'm sorry. It's overly simplistic, but it's a reality. But talking about the markets on a higher level view, at what juncture is it all over? All right, so here's the line in the sand that I concern myself with most. And it's this lower band of support here on the S&P 500. You asked about the S&P 500. I'm going to use this as my proxy. And it's a valid proxy. So I'll be looking for this lower band of support to break. Now, you may be saying, Bob, on a monthly basis, we have a higher high versus the prior peak. Good point. But we had the same thing back in (2007). We put in a higher high, yet we still broke down. So I'm not going to concern myself with the fact that we haven't broken down yet. If we break down below this lower band of support here, I open up a short position. Not a big one, but I'm going short the market. When do I get aggressively short of this market? Right here. 272.43 on the spiders. If we close below, and I'm not going to keep this live, I'm doing this for more dramatic purposes right now. If we close down below this support level here, it is all over. It is all over. And another chart that you need to take a look at is this one here. I'm using the wrong chart. Bear with me. All right, so this chart here is a view of the 30-year bond price going back to when the bull market began back in 1981, 1982. This at current, this rally in the bond market is the American dream. Prior to 1981, the American dream was you had father worked, mother stayed at home. You had 3, 4 kids. You had salary increases. You had pensions. That's all gone. It is all gone. To supplement the middle class, which has been eradicated in this country, all you've had is debt. Since the dot-com bubble, I looked at this earlier. Since the dot-com bubble, we have not seen a single year of 4% GDP growth in the United States. Before the dot-com bubble, you saw 4% growth on average going back to 1929. But you don't see that anymore. We can't even get 3% on an annual basis. So the reason why is because the debt. The government's getting larger. It's sucking in all the capital, taxation. The market never crashed during a trade deficit ever. No, you can't say that, Trent, because you had the financial crisis. We didn't have a surplus at that point in time. We had a deficit. Now, back during the dot-com days, you had a brief period where they stopped the clock, the debt clock, and that resumed. But if I'm wrong here, pop in a URL and I'll share it. I'm open. Maybe we had a span of time there where we had a surplus, but I don't think we were in a surplus at that point in time. I think the last time goes back to when you had Clinton in office and we had a House and Senate controlled by the Republicans. And they dragged Clinton to the negotiating table. So why this chart matters is that if this goes, if we break down below this lower band of support, which we did not too long ago before the Federal Reserve started acting again, it's all over. That means yields are ripping through the ceiling. And this is why the Federal Reserve is doing what it's doing right now. The repo market, the reason why the Federal Reserve is in the repo market, yeah, he did. The reason why the Federal Reserve is in the repo market is because what the market is trying to do is they're trying to get normalized rates, right? But if you get normalized rates, the interest on our debt spikes through the ceiling. And if it ever normalized, the interest payments on our debt alone would be probably on par with our military spending. That's how serious this all is. So if this goes, if this breaks, this 30-year bond bull market, and we break and we go back down into a bear market, the American dream is done for a very, very long time. And there's a way out of it longer term, but it's going to take a lot of pain. It's going to take shrinking of government, and we got to stop all these goddamn wars. It's got to stop. African swine fever, is that what it's called? The pork issue over in China? Good stuff. Thank you for that. All right, let's, we're at about an hour mark. Let's leave the last couple of minutes off with the futures. Let's go back. Let's see what's going on. All right, let's start with the S&Ps. All right, so we're still down on the session. We still have a reversal bar. So I think that ultimately, while we may open down tomorrow morning, I think that we are probably going to rally back, if not Monday, Tuesday, and we will proceed higher. The Federal Reserve is in there, guys. Can't ignore it. The Nasdaq, same deal. We're trading near the highs of the session, but yes, still down on the session, about spot 4 or 5%. Interesting. All right, we'll keep an eye on that. Second week of October ends bearish. Interesting. Okay. Thank you for that. Russell 2000. Thanks, RL. Appreciate it. Blockchain, yeah. You get a close on a. We'll come back here. You get a close below 272 spot 1 on the S&P 500, or the spiders in this case. It's all done. I mean, it's done. So and this could move higher. Remember, I think that we're going to rally into the elections. I think we're going to new all-time highs. I'm not saying it's right. I think horrible earnings are going to be horrible, but the markets will shrug it off, just as they did back in was it 2007 into 2008? You had the home builders, which were ripping, and they were reporting bad earnings. Yet they do. They have a very good stockcharts.com has a good seasonality to it. Yes, guaranteed. The home builders rallied into the crash. I mean, nobody saw it coming. So they're going to continue to pump this market higher. I think we're breaking out to new all-time highs. Yeah, I agree, Lo. So I would watch initially for a break of this lower band of support. That should be a constant. This new lower band of support should act as our trigger to watch for a continuation breakdown on the S&P 500. Now, if we begin to weaken up now, this will be my line in the sand where I just go shorting it will. And then I lean into it on every rally, because you're going to get on a break below support, you're going to get a rally. You're going to form an upper band of resistance. I'm going to short into those rallies. I'm going to lean into that short trade. So I'm not doing that right now. I have no plans of doing it right now, unless, of course, we begin to break. And if impeachment looks like a reality, and it goes to the Senate, and the Republicans do not have the president's back, short it will. Because that means Elizabeth Warren will be the next president of the United States, and they will not open up the markets the next day. They will not open up the markets. If they do, you're going to see a haircut like you've never seen on this market. It'll probably happen before she enters the White House. And if you haven't clicked that like button so far, thanks for joining. If you can give me a like, I'd appreciate it. Thank you very much. Let's go back to the futures, the Russell 2000, which I've been eyeballing. Frankly, I'm looking at the, obviously they're not open yet, the TNA, which is the leveraged ETF for the small caps. If you don't want that volatility, simply look at the IWM, which is a tracking ETF for the Russell 2000. I like the pullback here and a retest of support overnight thus far. The Russell is not down as much as the large caps. That's good. So I may be scratching the itch very shortly on the small caps. I'll be sending out an alert to members. And I'll go back to another chart really quick. And I warned about, I did this on, I do a Monday night membership mastermind group with members. And I spoke about the TZA. And last Tuesday, the market was weak. And the TZA puts you short of the Russell 2000. And I warned, despite the fact that we were up on the month and we're still up, we haven't yet broken out above this upper band of resistance. And sure enough, we backed off on a weekly basis. Look at this topping action here, right? So try to avoid shorting this market right now. You have the powers that be, the so-called elite. They're against you. They're going to try to hammer you into the ground. Don't short this market right now. I beg of you. Now, once we begin to break out and close above on a monthly basis, this upper band of resistance on the TZA, we'll be looking to nibble. We'll be looking to build a position to the short side on the small caps. But we're not there yet. The indicators here on the TZA are looking good. But still, at current, I believe they're going to push the market higher. Let's close out the futures. Let's go to the dollar. The dollar's down, but it's off the lows of the session. And on a 4-hour basis, we actually broke out on Friday above this downtrend line. Let's see whether or not that holds. I think the dollar may have put in a double top here. So the only reason why I'm hedging about the dollar is because the European central bank is just so much more corrupt than ours, if that's possible. Mario Draghi is a train wreck, and that is keeping the euro weak. And I know that you wanted to see euro versus US dollar. Let's go to that. All right, so this is the euro versus the US dollar. 4-hour basis. Let's go to a daily chart since this is a request. I wouldn't buy the euro. On a 4-hour basis, the chart looks okay. On a daily basis, this is the problem here, is that we remain in a downtrend. And we're struggling to break out. At current, you could argue that we have a breakout on a daily basis because the dollar is weak. But you saw, note these candlesticks here, the topping tails. When you see topping tails like that, you're welcome, blockchain. Thank you for joining. Appreciate that very much. Thanks for joining every week. You're great. The topping tails imply that we have sellers above, right? So we have overhead supply here, and that's going to be a bit of a weight on the euro. Now, I do believe that the dollar is weakening up here. I said it earlier. We have probably seen a double top, and there's going to be a war on the US dollar to try to get our manufacturing sector out of what it is right now, which is recession. Yes, I said it, in recession. So there's going to be a push for that to happen. So if we overcome these topping tails here, which is at one spot, let's call it 1.11 versus the US dollar, then you may see a rally up to, I don't know, 1.12. But there's a lot of overhead supply here. I don't think it's going to be a straight shot up higher, to be frank with you. Yeah, Europe's a mess. I mean, everywhere you look nowadays, it's just an absolute train. It's all very, very sad. I feel so bad for the kids. I feel horrible for them. They're going to have to inherit this train wreck of what's coming down. And all they're going to do, once this bubble pops, they're going to do what they've done in prior bubbles. They're going to come back to us, the taxpayer, and they're going to soak us to bail out the so-called elite. And with that, I leave with a very sad heart about what's going to happen. But you need to be positioned. If you're open-minded to what's setting up here, there's going to be a lot of great opportunities. I mean, a year ago, I was pounding the table on gold, people saying I was nuts. I was buying NUGT hand over fist, and it's been volatile, but it's paid off very, very well over the past year. And gold is at multi-year highs. Gold relative to the Canadian dollar, to the Aussie dollar, is back to all-time highs. So once the dollar breaks, you're going to see, I can't believe gold hasn't moved up higher. You're going to see gold rip through the ceiling because it's a safe haven play. Historically, that's what it's been. Silver, same deal. It's even cheaper than what is gold. Technically it's not looking as wonderful. We have a bit of a downtrend going here. But I think we're going to break out again on silver. The daily charts, I really don't care about the daily charts. I care about the weekly and monthly charts because I think we're going a lot higher here because what we have is a train wreck that's coming down the tunnel. You remember as a kid, you watch the Roadrunner and Wile E. Coyote or Bugs Bunny, if you're of my age group, and you'd see the bad guy standing on the trade tracks looking down the tunnel, and all there was a little light, and it became faster and faster coming down, bigger and bigger coming down that tunnel, and then ultimately it ran over the coyote, and that's what I'm seeing right now. So it's a small light right now of a crisis. That crisis is going to illuminate larger, and we're going to see the mother of all bubbles blow. The trade here at current is gold, silver, and stocks to a lesser extent, because at some point in time, they're going to break. Now, after they break, there's going to be a total annihilation of the stock market and the US dollar. We'll be looking then at emerging markets. Aggressively buying emerging markets because the United States, the Western civilized world, is going to have to sort itself out. If you haven't pressed the like button yet, please click that like button. Thank you for joining. And while it's sorting itself out and the dollar is weak and probably no longer the world's reserve currency, that's like a tax hike on emerging markets. I want to be buying emerging markets in the future, not now, not until the dollar breaks and the stock market breaks. After that, we'll begin looking to buy stocks. But in the short term, I want to buy gold, silver, stocks after the 2020 elections, or if there is a threat of a Warren presidency, I want to short this market with reckless abandon. And then after we crash, I want to buy emerging markets. We will be paying a lot more in taxes. Yep. Very, very sad. And with that, folks, I want to thank you all for joining very, very much. Another great week having a talk with you. Thank you for your participation, and it's always a joy. Join me in the mornings, if you can, on Swing Trading Today. That's 5 a.m. I try to do it every morning. I'm not going to do it tomorrow because I'm doing this tonight. But usually on Tuesdays, Wednesdays, Thursdays, I try to do it. Maybe on Fridays if I have something to say. Join me live, again, 5 a.m. Eastern Standard Time on YouTube. And please take advantage of our 14-day free trial offer. If you like TrendSpider, use the silver and gold level membership. You get it free. Good night, Samuel. Good night, everybody. Have a great night. And please click that survey. If you could take that survey in the description area below, I'd really appreciate it. Thank you very much. Have a great night.